Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everybody. I'm Ethan Feller, stock strategist here at Zacks. Hope you all enjoyed your holiday weekend. Today, we have another edition of Top Stocks of the Week, where we go, myself and a colleague of mine go through our top stock pick of the week. And today, I'm going to be diving into what I think is one of the most exciting and underappreciated AI stocks in the market. The company is called UiPath, and the ticker is PATH. So we all know that NVIDIA is powering the AI revolution with its GPUs and data center products, but UiPath is automating it. The company is really at the front lines of enterprise automation by using software and robots and now AI agents to help replace repetitive manual tasks in finance, HR, IT, and other business procedures. So their goal is really to help companies create a digital workforce that is, never sleeps, is smart and scalable, and increasingly autonomous. The company has over 10,000 customers. They work with over 80% of the companies on the S&P 500. They have a major developer community and have partnerships with the big tech companies like Microsoft and Alphabet. And, they really just want to become, help companies become fully automated enterprises. So they're really at the intersection of AI and automation and robotics too, and really just like pushing business community into the future, really. The stock has been pretty beaten down over the last few years. It was kind of like one of these hyped companies that had good growth, but it didn't really have positive earnings. It wasn't profitable. But it most recently started to become profitable, has positive earnings, and they're really leaning into this AI and agentic opportunity. So let me get into more of the details. So here you can see the Zacks page that covers UiPath. We can see that it has a Zacks rank 1 rating, which indicates that analysts have improving sentiment, and they've been upgrading their earnings forecasts for the stock. We can see the earnings estimates here. You can see the current quarter earnings estimates are up 14.2%. The mixed one up, one down for next quarter, so it's unchanged. This year's earnings estimates are up 7.7%, and next year they're up 7%. So not humongous upgrades, but clearly improving sentiment, and analysts are just expecting more earnings. It also has a good history of beating earnings estimates. You can see over the last 4 quarters, it's beat 10%, 37%, almost 60%, 33%. So, company tends to outperform expectations. So, UiPath is a $7.1 billion company. They have annual recurring revenues of $1.7 billion now. So those are just the subscription type of revenues. And, those are sticky revenues. And, like I said, the company was hyped up, it was up to $80 in 2021. And it's really come down a lot. I mean, it's down today, it's trading at $13. So, that hype has been shaken out. It was trading at a huge sales multiple then. Now it's, of 4 or 5 times sales multiple, which is even below the market average. And it's just, we can see it came down. We'll take a look at the technical chart in a minute, but you can see it really got killed, at the end of 2021 and through 2022, which were some pretty challenging years in the market. And, started to, start up again in 2023, 2020 to 2024, but it got hit again. And it's really those negative earnings that creates a lot of uncertainty for investors. So now that the company has managed to turn net profitable, I think now is really the time where it's going to start grabbing investors' attention. And it's just, at this point, it's a good investment because they have positive earnings. And here we can see it has a reasonable valuation at 23.9 times forward earnings, which, it's not dirt cheap, but it's a company with real exciting headwinds. You can see earnings estimates are expected to grow 18.4% annually over the next 3 to 5 years. So if you look at the PEG ratio, which is one of my favorite valuation metrics, it's 1.3, which means, it's not cheap, but usually two, PEG ratio of two would be expensive. The PEG ratio basically takes the earnings multiple it takes the earnings estimates, excuse me, takes the earnings multiple and divides it by the earnings growth forecast. So, below one and something is really compelling. So, this is fairly priced, but I think with the tailwinds of these agentic products that they're coming out with, you have something that's really exciting, something that's building. And something I really want to talk about is these enterprise AI efforts and their agentic sort of automation for companies. Now, we're into year three of AI, and, consumers and developers, we're all very familiar with the LLM products. And a lot of companies have been making big efforts, hiring consultants, bringing on new people to sort of build out internal AI tools and continue to automate workflows and processes. And basically, a lot of what I'm hearing is that it's not going that well. They've paid consultants millions of dollars, and they haven't really made a lot of big strides in actually implementing these internal tools to decrease labor costs and increase employees' productivity. But UiPath is really breaking into this, and they've already had a lot of success in automation. And I think it could be a really big opportunity for them. I think they're good at what they do, and I think that if they can come out with an agentic product that really makes a difference for companies, it could be a real boom for the company. So alone, it's a pretty exciting, enticing investment at 24 times earnings and 18% forward earnings growth forecasts. But with this AI tailwind, I think you have a real catalyst going forward. And yes, so let's take a look at and you can also see, well, it's in the top 18% of the sex industry rank. And so let's take a look at the technical chart. So, we can see it's got, it had this bottoming pattern, maybe a double bottom, sort of, this cup and handle kind of formation. I mean, it's not perfect, but it doesn't have to be perfect. And this looks like a real bottoming pattern. And at nine something dollars, the company was trading at just a few times forward sales multiple, and seen a nice move off the lows. Next, let's zoom out. So this was the highest in 2024, got up to $25, but got slammed lower again. And if you look even farther back, look how far this thing has come down. I mean, it's down like 80 something percent off of its from 21 highs. So there's a lot of room to the upside. The company still has catalysts. And I think this consolidation right here. So this is a funny bar head on earnings. They actually beat on earnings. I think they adjusted their outlook, which I think spooked some investors. But the stock has continued to hold up, and it's just forming this nice consolidation. Like a bull flag or something, you might call it. And this $13.50 level, it's tested it a few times here, and this has been sort of a tough range. The stock is really trying to get out of it. And this, I think this consolidation, you have good valuation. We got upgrades from analysts who we have now net positive earnings. I think if the stock can clear this $13.50 level, it makes for a big opportunity to the upside. So watch this level, 1340, 1350, call it. And, I think you could see a quick move up to this other level here, 1550. And, after that, you have a big gap fill here. Stocks tend to fill gaps. So, if you can clear this 1340 level, I think, this is in play. And that'd be a really significant move. That's all for me today, folks. I hope you enjoyed my analysis of UiPath. Next is my colleague, Andrew Rocco, and he's going to be taking a look at Coinbase. So he's going to tell you all about it.
Okay, welcome everyone. My name's Andrew Rocco. I'm a stock strategist here with Zacks Investment Research. I also do manage the Tech Innovators portfolio here at Zacks. And today I'm going to cover my top stock pick for Monday, July 7th. So hope everyone had a great holiday weekend, and let's jump right into things. So I'm covering Coinbase Global, which is a Zacks rank number 3. Ticker symbol COIN. This is one that I've covered in the past, and full disclosure, I do own the stock in my portfolio my personal portfolio, as well as the Tech Innovators portfolio. And Coinbase operates the largest crypto platform in the United States, supporting over 200 digital assets like Ethereum and Bitcoin. The company handles the most trading volume of any US based crypto exchange platform, and it offers a variety of services from retail investors to institutional full service prime brokerage platform, as well as various products in the digital asset ecosystem. So the company is currently benefiting from higher transaction volumes as more of the public moves to adopt crypto. But one of the most exciting and underrated sides of Coinbase business is the stablecoin business. So, in case you guys don't know, stablecoins are digital assets that are built to maintain a stable value, and they're linked to an asset such as the US dollar in Coinbase's case. And though Coinbase's stablecoin business is often overlooked by Wall Street investors and analysts, it's rapidly becoming an integral part of its booming business. For example, in Q1, stablecoin revenue from USDC, which is Coinbase's stablecoin, that shot to roughly 300 million, and it comprises roughly 15% of the company's revenue. But what I really like about it is this catalyst, which is the Genius Act, which stands for Guiding and Establishing National Innovation for U.S. Stablecoins. It's landmark legislation that will seek to regulate the burgeoning stablecoin market in the US. So this was a complaint of actually Coinbase CEO Brian Armstrong often complained that there's no regulatory clarity, but this act will provide that regulatory clarity. And it recently passed the US Senate in a bipartisan manner, and it's expected to pass when it moves to the US House of Representatives. So if and when the act passes, in my view, it will lend credibility to this market, drive institutional demand, as well as spur adoptions from ordinary crypto users. Now, let's talk about why the stablecoin business is so exciting at this point in time. So, stablecoins allow users to send money faster and far cheaper than traditional international transactions. So in addition, stablecoin holders can stake their holdings to earn rewards on their stablecoins without trading. And last year, stablecoins went mainstream. They were responsible for more than 2 times the transaction volume of credit card juggernaut Visa. So Visa is actually trying to get into the stablecoin business, but you can see already this transaction volume is already well past that of Visa, which is pretty shocking. And meanwhile, Tether, which is the company behind the largest stablecoin, they're the most profitable company in the world per employee. So they generate 14 billion in profit last year with only 150 employees. So this is a high margin business. It's growing rapidly, and now they have that regulatory framework to give them some credibility. Now, Coinbase is partnered with a company called Circle Groups, ticker symbol CRCL, which has been one of the hottest IPOs recently, and they receive half the revenue generated from USDC. Circle receives the other half. So Circle shares have more than doubled over the last month. However, investors may want to pay close attention to a market dislocation. So though Circle derives all of its revenue from USDC, USDC revenue only represents a small segment of Coinbase's business at the moment, roughly 14%. Nevertheless, Circle currently has a market cap of 50 billion, while Coinbase's is 87 billion. So in other words, investors are vastly undervaluing Coinbase's core crypto exchange business, considering Circle has almost just as large of a market cap from the stablecoin perspective. So there's a little bit of dislocation. I actually am bullish on Circle, but I think the bigger opportunity is going to be in Coinbase from these levels. And Coinbase has a sparkling clean balance sheet Beyond the stablecoin Catalyst, Coinbase offers investors a cash hoard which has grown consistently and has swelled to nearly 10 billion. So really good cash flow. It's a profitable business. Um, they don't necessarily need the crypto market to be going higher. They just need people to be transacting in crypto, which we're seeing more and more of. So that's going to be a long-term bullish trend that Coinbase can latch onto. Now, let's talk about Coinbase's revenue growth. Coinbase generates revenues from transactions, subscriptions, and services and other activities. 84% of revenues come from the United States, and no other country accounted for more than 10%. However, over the past 5 years, total revenues witnessed a compound annual growth rate of 52%. Higher transaction revenues, subscriptions, and service revenues are expected to drive the metric even higher. So growth in crypto assets as well as higher volumes of transaction conducted on the Coinbase platform should benefit the top line moving forward. And then here is the technical framework for Coinbase. This is a daily chart that we're looking at. And what I like here is you see this large base structure. So there's an old saying on Wall Street, the longer the base, the higher in space. So we're starting to break out. Look at this beautiful accumulation volume, these big green bars that we're seeing here. So on a technical perspective, we have the stablecoin Catalyst, we have the technical setting up, and they have a very strong balance sheet. Not to mention, this is an institutional quality stock. And then the last thing I wanted to cover was the impressive history that the company has of beating Wall Street expectations. So Coinbase has beat Zacks consensus estimates for 9 straight quarters and delivered an average EPS surprise of roughly 33% over the past 4 quarters. So remember, Wall Street's all about expectations, and are you delivering above those expectations? And that's certainly been the case for Coinbase. So again, thank you all so much for tuning in today. We do have a promo, by the way, if you guys want to go to zacks.com/promo. That's zacks.com/PROMO. Again, my name's Andrew Rocco. My top stock pick today was Coinbase, COIN. And everyone have a great week. Thank you so much.